What's up, traders? This is Keith here. I just wanted to go over some basic stuff today, a basic pattern that I look for when trading. And this pattern alone has definitely helped me make some good trades, make some good money, and improve my statistics. So I want to go over this quick pattern with you guys, explain it to you, show you what it's all about, and hopefully you guys can learn something new today. And yeah, you guys, thanks for watching. If you could subscribe, shoot a thumbs up, I'd really appreciate it. Let's get right to the video. What's up, traders? This is Keith here again, back with another video. Wanted to cover a basic pattern that I believe all traders should definitely recognize and use as a part of their toolkit in trading. This pattern, which is called a flag pattern, is probably one of the most recognized patterns in trading. And so therefore it's very useful to know, useful to spot. And I believe that it can definitely help you guys out. If you know this pattern, then you can just anticipate the moves. So let's go ahead and show you guys what a basic flag is and how I look for them, all right? So I'm just gonna start over here with paint and kind of draw you out exactly what I'm looking for here. Let's go here, we'll just start with the green. So what I'm looking for is I'm looking for a big spike in price, okay? And with that price, spiking, you're going to want to see some volume increase as well. But we see the big spike in price, and we don't chase these stocks, guys. That's the one thing that we don't do. We don't chase. If you see a big spike like that, the last thing you want to do is end up buying up here on the top, and then the stock come flushing back down on you. Okay, so we wait. We see the spike, and that's a good sign. So instead of chasing it, we sit back on our hands and we wait patiently. Okay. The next step is we get that correction to the downside, so that pullback, okay? And to create the bottom here at the low. Okay, this is the low of our flag. And then what we're looking for is a bounce, okay? Coming back up, almost testing the highs here, and not quite. We don't want to chase this move either. I've seen traders chase this move a lot too. And then we just kind of jump down, not quite hitting the lows, maybe even hitting the lows, but you're kind of just consolidating in here, right? And then, boom, this is the move we're gonna look for. We're looking for the big increase in volume and the spike in price back up through this level. All right, I actually created a quick little diagram here for you. You guys can screenshot this, snip it. Once again, we get the step one is the spike in price, creating the flag pull, okay? And then we see some consolidation in here. Okay, it's sideways consolidation, step two. And then step three is entry through the flag pulls high, which is right here. Alrighty, guys. Yeah, so I just wanted to show you this flag pattern here on a smaller time frame, 2-minute time frame. Each time frame is gonna, depending on the time frame you're looking at, it's gonna change too. So it's very important to pick a time frame, track it, see what you guys like best. So this is showing you on the 2-minute time frame here. Okay, so we got let's go ahead and just back it on up and pretend like we're watching this thing pre-market. All right, guys. So now we got it on watch, and we're pre-market, just watching the stock. And here's what happens. Okay, so we get the dip, and then we get the spike in price here. Now this is the spike I was telling you about that you don't want to chase. You guys don't chase these stocks up, because what will happen is you'll end up buying here at the top, and then it'll come crashing back down. You never know where that top's going to be. Last thing you want to do is be buying, chasing the stock up. All right, so there's the first move. That's what we're looking for. We're seeing that initial spike, and we're remaining calm, and we're sitting on our hands, okay? Because at this point, the stock could do anything. It could pop up, and then it can immediately drop down. It could pop up and keep going, and so we're just waiting after we see this move here. We see this move here and we wait, okay? So step one, spike in price, okay? Step two, sideways consolidation. There's that dip, okay? It came down, corrected, went back up, it's coming back down now, and it comes back up. And what I like to do too is I'll plot the high of the flags pulls high. You see that right there? That's the plotting the high. And now you know that when it breaks that high, that's your entry. It's very simple. That's your entry, the break of that high, No need to complicate it by getting in here, getting in there. You just, because you know that once it breaks this high, you know, that's where where it's really gonna take off. It should. You know, you can anticipate the moves and try to get in here and try and do all that stuff, but me personally, I'd rather wait and see confirmation of the move before trying to anticipate anything. There's no need to, oh, I want to get in early because I'm, you know, this and that, you know, because what can happen is it can come up to here and then it can fail. The reason why I believe personally is for waiting for the high is the best idea, because a lot of times, you know, with trading, you have your bulls and your bears. The bulls are the guys that want the stock price to go higher, and the bears are the guys that are banking on it to go lower. And what will happen is a lot of these short sellers will put their stops right at the break of high a day or right at the break of these levels here, and so when they have to stop out, they're buying to make the stock go higher. So it only makes sense to me that you buy the break of a level where the short seller is going to be selling out or stopping out. A short seller is not going to get scared if a stock comes here. A short seller is not going to get scared if a stock comes here. A short seller is going to be scared if a stock breaks this level here, and because it could potentially go higher. And that's where a bull will want to get in. Okay, so once again, a quick little recap. All right, so let's go ahead and bring this back on over, and let's see how close does this, which I made months ago, how close does it resemble this? Okay, it resembles it pretty well. All right, you see that? So step one, we got the spike in price. Step two, got some sideways consolidation there. Step three, entry through the flag pulls high. There's your entry right there. Now, a question I do get also, which is very important to know, is where is your risk level going to be at? Your risk level is very important too. Every trader needs to know exactly where their risk is going to be before they enter a trade. So the risk level for me, what I like to do is I'll put it at certain levels here. Maybe the break of 50 if I want to be really, really tight, because 50 is a psychological number, so if 50 breaks, then it could go lower. Some guys trade it, will put their stops way down here at 720, below support. Some guys use indicators like VWAP or moving averages, and they'll put their stop below those levels. So the stop price is all dependent upon you, how tight you want your risk to be. You know, obviously the tighter the risk, the better risk reward you're gonna have. But if it's too tight, you'll get stopped out as well, which we've all experienced, I'm sure. So quick little flag pattern there for you guys. Very simple, very straightforward. No need to complicate things. It's as simple as waiting for the price to spike, sideways consolidation, buying through the flag pulls high, and you're good to go, guys. If you have any more questions or any comments or anything, leave them below. I'll make sure to answer every single one of them. If you could smash that like button, subscribe to my channel. I'm gonna put out a lot more content. You know, trading is my passion. I love to trade, so it only makes sense that I create a YouTube channel and get you and share what I know. I'm no professional by any means. I don't claim to be some baller ass, you know, dude. I'm just a normal guy trying to make it. You know, I'm grateful for what I got. I don't need to be doing any, you know, trying to be all flashy and this and that. But you can see the results of this trade here. It spiked up and it just ripped. So if you're risking like 10 cents, you know, if you're risking 20 cents, you would have made back, you know, four or five times that. All right, guys. Anyway, I'm gonna wrap it up there. Hope you guys are having a good trading day, good trading week, good trading month, and yeah, I will talk to you soon. Later.